Opinion then, and an exclusive interaction with CNBC TV 18, Naren, the CIO of ICICI Prudential AMC, says that this quarter does not look like an earnings turning quarter, and also says that earnings will pick up gradually over the next 2 years.
I don't think the earnings turning quarter can be this particular quarter. I think clearly if you look at the quality of earnings, it'll improve in metals and many of the other areas, but there are industry-related earnings in banking and capital goods which all have to improve over the next few quarters. And without that happening, I wouldn't call it a turning quarter. Having said that, we are a believer that earnings will pick up gradually over the next 2 years. The economy will pick up continuously over the next 2 years. And earnings will accelerate once we have a private capex cycle, which we expect now only in 2018. So, which is why we believe that the outlook for the next 2 years is pretty positive.
Okay. But if capex is not turning, what will you rely on as the leaders of, say, the next 12 months? Will it be consumption?
See, clearly it has to be, over a period of time, it has to be cyclical sectors. Today, it can't be the consumer sectors or the very defensive sectors like IT. It doesn't look like IT is turning around immediately. So I think clearly it has to be financials over the next few years. It has to be capital goods over the next few years. It has to be areas like utilities and maybe sectors connected to the economy like construction, which all have to improve over the next 2 years. Okay. I think that's where the battle is. When we look at valuations, we can clearly see that the market is not cheap. Although we think that the underlying economic cycle is improving, we don't think the market is cheap, and that is clearly a bottleneck in expecting big returns.
Okay. Okay, let's start with financials then. What in financials? For the longest time, we have heard this private sector being better than public sector, but would you say the tide is turning? And likewise, would you say the NBFC sector is still worth buying?
So actually, I think if you look at the NBFC sector, while it is not part of the large cap indices, any sector where you have so many new entrants coming and so much of money being raised is normally a sector which is in a boom. So I would say that NBFC sector is going through a boom. And I think over the next year or so, we will have to be cautious investing in equities of NBFC stocks, because they've all actually gone up substantially. On the other hand, banks, I think the NPL cycle will possibly peak out this year, and over the next 2 years you're going to see an improvement in the NPL cycle, and that improvement in the NPL cycle is likely to result in earnings improvement, which I think will happen over the next few years rather than 1 or 2 quarters.
We have been, a function of global flows. Would you worry that there can be something like an apocalyptic situation, either because of European banks or the Fed's moves?
So I think if you're going to have an apocalyptic situation, you're not going to see any returns in equity markets. And what we do believe is that the global central banks have spent the last 5 years trying to prevent apocalyptic situation. Consequently, we do believe that when we look at the next few years, the optimism is based on local factors, and global factors we believe only can be marginally negative over the next few years, because none of the issues that are there in most of the world except US have got resolved. Growth doesn't seem to be coming back. And we are not able to see the problems that are getting solved in many of the countries. So I think clearly the global backdrop is nothing great. They've used the interest rate route significantly. And today, if post the US election, if the government in US decides to use the fiscal route to revival, and you have a big move in yields, that would turn out to be negative for Indian equities. So I think clearly the biggest risk, as you correctly pointed out, is global, and we should not see a big spike in interest rates. Any big spike in interest rates can lead to Indian markets going down.